You're tuned in to Market Pulse. Right now, we're picking up the pulse of the day with Economy Analyst with Nairametrics, Aghogho Udi. It's a pleasure to have you join us, Aghogho.
Thank you very much.
All right, we're seeing the decision that has been made and announced, 50 basis points interest rate hike. Between January and May 2022, the CBN has raised monetary policy rates by a staggering 750 basis points. But if we factor in the latest, right, between January and now, it's now 800 basis points increase so far. With the implications, right, on cost of borrowing, just how much do you see this affecting the Nigerian corporate space and their participation in the capital markets?
Definitely cost of borrowing is going to increase, and overall, in terms of real economic implication of that, we might see that companies might not engage in expansion activities for now. Those that might be placed on hold until perhaps rates come down so that cost of borrowing will be reduced. Because an earlier analysis done by Nairametrics revealed that the cost of borrowing for consumer goods companies in particular soared by around over 1,000% in the first quarter of the year. And perhaps that's also on the back of exchange rate depreciation and coupled with NPR hike by the CBN. So we're also seeing that the rates of increase in NPR rate now has depreciated for some time. It has been depreciating from 400 to 200 to 150 to 50. So perhaps we're looking into the period where perhaps they start dropping rates so that the investment climate and cost of capital, accessing capital will reduce for businesses to thrive. Because a lot of stakeholders in the business community have complained about the hike in interest rates. Prominent among them was Africa's richest man, Aliko Dangote, who said no job will be created, no economic growth with interest rates at around 30%. So perhaps I think they are looking into that now, and in the future, perhaps in September when the CBN meet again, we might see rates come down. Depend on what happens to inflation though and the exchange rate market.
All right. I mean, we're just digesting the latest hike, right? So we'll see whether or not in the future they will hold rates or cut rates. But definitely we are seeing that effect on the investment space. I'm coming to David now. David, on the other hand, stockbrokers in the Nigerian capital market, they've observed encouraging signs of high investor participation in the ongoing public offerings and rights issues by banks. Some have even gone as far as to say most banks will be fully subscribed, if not oversubscribed. Do you share in this sentiment? And what's the data saying as regards this?
So basically, we've seen Fidelity Bank on July 26th. That is, in the next 3 days, they're going to hold an extraordinary general meeting where the main agenda of the meeting is increasing the subscription offer. So based on what we've seen from Fidelity Bank was going to issue about 10 billion shares thereabout. But now we've seen a situation where this bank is going to their shareholders and saying we'll probably have to increase the number of shares in our offer because there is a likelihood for oversubscription. So I think this is one of the information that is driving the sentiment that there's heightened activity or there's heightened interest in the public offerings. So another thing there is that over the last 2 weeks since the start of all this wave of different public offerings, we've seen a whole lot of drop in market activities. So there's also the sentiment that rather right now investors are aggregating their funds to push into this public offering. So we've seen, basically we are seeing public offering of right now, the public offering and right issues about 878 billion on the table. So there's a lot of fund that would go into that space rather than going into the equities market itself. So right. Those are some of the information driving the idea. So I feel like maybe we'll have to wait and see.
We'll have to wait and see. I'd like to get Aghogho in here as well. There's a lot of activity in the fixed income space, but there are questions around a thinning system liquidity. How far do you think liquidity in the system can be stretched? Is there enough liquidity to meet all the demands on the equity and fixed incomes market here in Nigeria?
Data to say that how far it can go. Well, if you look at the amount of money outside bank and as a cash outside bank and all of that, you can see that it has been increasing, I think, since last year and earlier this year, despite efforts to stock up liquidity by the Apex Bank and all of that. So perhaps I think the banks and generally money outside banks will be able to, it can go far until interest rates try to come down, and perhaps the CBN also reduce the cash reserve ratio of banks so that there will be enough liquidity and all of that. But for now, banks have not signaled any complaints that the monetary policy tightening by the Apex Bank is affecting liquidity and all of that. So it can go on for some time, but except we see comments from those in the banking sector of such effects, as in the tightening effect on liquidity and all of that. So that's it.
All right. Thank you for that, Aghogho. I'm coming back to David now. We're following up with yesterday's bond auction. The federal government has raised 225.714 billion naira in July 2024 bond auction, which is about 75% of its target. Last month, about 297.006 billion naira was raised from the June bond auction. So this means that the amount raised this month has dropped slightly by 24%. What's your assessment of how investors are positioning, or should I say repositioning, across the T-bills and the bond curve?
So basically, there's two things that are involved in this case. So we see a case of the federal government through the CBN trying to stem their rate of borrowing through treasury bills. In the first 3 months of 2024, we saw the CBN issue about 10.4 trillion naira worth of treasury bills, the highest ever in history. The amount of treasury bills issued by this administration has been the highest issued by any administration ever in Nigeria's history. Since Nigeria started issuing, the whole thing about treasury bills started under the president Obasanjo, but that was very little. That was when the CBN were issuing open market operation bills, OMO bills. But under Jonathan, we saw like a very increased interest in treasury bills. But now we've seen, it seems like that's the only source of income for the government. We don't know. It almost seems like that's the only source of financing. Since they came in, they've issued about 22 trillion naira worth of treasury bills. So that's one on the side of the government trying to stem the rate at which they borrow. And the borrowing is not cheap. For example, yesterday's yesterday T-bills auction were done at about the 364-day bills, 20.67%. That's a whole lot. But we also see something on the investor side. We are seeing that the investors are now choosing to just focus on higher yield bonds, higher yield bills, which are the 364-day bills, because the inflation rate of the country, the benchmark rate of the country, now we have a benchmark rate of 26.7%. That means when you compare the benchmark rate and the yield rate, we are having a negative return. So investors are not really enthusiastic like they were at the start of the year.
Yeah. I guess, there are trade-offs there, but thank you so much for that insight. Stay with us, David. We're going to have you when we're spotlighting a particular meme coin. And as well, thank you, Aghogho, for joining us for Pulse of the Day, analyzing market activities for today. It's still Market Pulse right here on News Central in partnership with Nairametrics. We're going on a break right about now. When we return, we'll be spotlighting a particular meme coin, of course, tracing what's happening in the United States and its effect on the cryptocurrency space. It is still Market Pulse. Stay with us.